Credit card spending did bounce back in July. New data from Bank of America shows an increase of 0.1% year on year from June's decline. The jump due to the 4th of July holiday spending, maybe a little of the Amazon effect. Retail promotions, movie mania as well, Barbie merchandise. The BofA monthly consumer checkpoint gives us real-time estimates of Americans' financial behavior because it has data from 68 million consumer and small business accounts. And joining us now is Liz Everett Krisberg, head of the Bank of America Institute. It's great to see you again.
Great to be here. Thanks, Kelly.
So what do you think on the consumer? I mean, yesterday or this week, we've gotten reports about how 401k hardship withdrawals are up, and there's different signs of delinquencies rising in some parts, of the credit space. And yet it looks like spending is back, hitting a positive inflection point.
Spending is back to positive. I think when you look at our overall data, you're seeing positives in spending. You're seeing positives in income gains across all income cohorts. So wages are coming in higher. And then the other thing you're seeing, I always look at what sort of deposit buffers, checking and savings account. Do people still have money and continue to be well in excess of where they were in 2019?
So why, maybe I'm making too much of this report, why are 401k hardship withdrawals at a high when people have historically more savings than they ever had?
Well, it's a great question. And one of the things that we looked at when we were thinking about the deposit balances is we keep on talking about how this is really in excess of 2019. But we did a couple of scenario analysis to say, all right, what if spending accelerates? What if? And in every scenario, lower, middle, and higher income households still had more money in their accounts through beyond 2024 than they.
Wow.
Yeah. And now let's take it one step further, because we're talking about inflation this morning, right? What if we inflation adjust 2019, right? If we do that, even then, the lower income cohort still doesn't dip below the inflation adjusted number until September of 2024.
It's really interesting. And I guess the question becomes, okay, so has inflation already, put consumers on the back foot here or not? And then what is that going to mean for the continued strength of the labor market, the Fed rate hikes we were just talking about?
Well, here's how I think about the labor market. One of the things that we're able to look at is inflows into accounts. So your after-tax wages plus your salary plus your bonus plus any other way you're getting income, right? And in that scenario, we continue to see growth across, but interestingly, so about 2 to 3% for lower and middle income households. Higher income households, as recently as May, were actually contracting, but in July, they're back up 0.4. Now, that's still a lot slower than lower in the middle income household, but it's still growing.
Right.
So that's one of the things we need to think about.
Can I ask you, and I don't mean for this to be a political question, but you look at all these polls around the country, and people seem to think that the economy is doing terribly.
Yeah.
And I'm so curious how you square that relative to the numbers that you see in the checking and banking accounts.
When we have our editorial board and we think about what we're going to investigate and what we're going to look at, we look at the headlines and we say, okay, everyone seems to have these dismal things. Is this true? And we go back and we look at the data and we let the data drive the discussion. And frankly, I have a lot of reasons to be optimistic right now. So
can you explain it then?
Well, some of it could be sentiment, right? If people are thinking, oh, inflation's really, awful. People don't necessarily, I hate to say this, not that people don't know what they're feeling, because they are feeling that things maybe aren't as great. But, if I said to you, gas prices went up, how did you change your spending? Would you know? I don't know that everyone necessarily knows how they're making their decisions, and we're able to see it in real time.
But we always say that people vote with their pocketbook. They vote with their wallet, right? That their feelings are real. And
yeah. And they are. But I think what we're seeing is the reality. You're continuing to see income gains, right? So you're continuing to see money in your account. The market still doing pretty good.
Right.
Consumers holding up.
They're holding up. They're not happy about it. We saw the consumer sentiment survey bottom in June of 22 when inflation hit its high. So ironically, consumer sentiment is higher now than it was at peak inflation.
Right.
But, I was at the grocery store the other day, and a few things have now reaccelerated back to prices from like a year. It doesn't feel good. And so you say, well, but, you can afford it. Okay, I can afford it. But it makes me feel unsettled and angsty and mad. And I think that's what is probably being captured.
Well, here's the thing. I think that even if everyone feels great, it doesn't feel great, but then they have the money, they're going to react that way. But what we're actually seeing is that the spending is continuing. As you pointed out, we accelerated for the first time in 3 months, right? So people they may not be talking about how they're doing it, but they are certainly still spending.
just goes so against the narrative that everybody's living some kind of YOLO life. They're putting it all on their credit cards. But I mean, we do see the credit card piece, but that.
Well, here's the thing that's really interesting that happened this month.
Yep.
We talked for the past year about the shift from goods to services. They want to go on trips. They haven't been able to go on trips. This month, goods was positive for the first time in over a year. So maybe the trough of goods spending is behind us, and maybe that transitioned from goods to services.
Exactly what the bulls are hoping about the ISM manufacturing surveys and the industrials and all the rest of it.
But services is still up, so maybe we're back to the pre-pandemic
Okay.
normal.